Hi, I'm Mike and this is Mikeonomics. In this episode I'm going to take a first look at the UK government's actions to tackle the economic impact of coronavirus. I plan on going through some of the measures in detail, but for now I want to start with the speech given by the Chancellor of the Exchequer, Rishi Sunak, on 17th of March 2020. I decided to start here because it was the first main address to the nation regarding the economic impact of the pandemic. Rishi announces the first major financial interventions that the UK will take, but he also goes to great lengths to provide reassurance on what was and still is a very concerning economic situation for businesses and the people. The economic backdrop to the speech was one that included a 33% drop in the UK stock market in just 3 weeks, the fastest market fall on record, where over 8 years of stock market gains were wiped out. The markets found at least a temporary bottom around this time, and it's safe to say that the coordinated response of governments and a guarantee of liquidity from central banks across the world was the reason for this. I highly recommend watching the full speech if you've not already seen it. It's one for the history books, I'm sure. It's on Rishi Sunak's YouTube channel, but the transcript is available on the .gov website. So on with my breakdown of the speech delivered by Rishi Sunak, Chancellor of the Exchequer, on 17th of March 2020. Now straight away Rishi states, "We have never in peacetime faced an economic fight like this one." Rishi sets the tone here and we are left with no doubts as to the gravity of the situation. Only 10 years ago we faced the great financial crisis which nearly brought down the global financial system, and at the very beginning of his speech we are told that we face a bigger economic fight than that. I'm sure I'll discuss this in more detail in future episodes, but some of the ammunition we relied on to fight the last financial crisis has been used and isn't available for this one. I'm specifically referring to reducing interest rates in order to stimulate spending. The theory behind this is that by reducing interest payments on loans, the total cost of servicing loans is reduced, and therefore companies and people will borrow more, therefore spending more, stimulating economic activity and hopefully economic growth. Before the 2008 financial crisis, interest rates were above 5% and were subsequently cut through 2008 and 2009 all the way down to 0.5%. The rates remained largely unchanged by the Bank of England until the current crisis, where they reduced the rate from 0.75% to 0.1% between the 11th and 19th of March. I'll probably dedicate a full episode to interest rates, but it's an important aspect to note, especially as we are now looking at the very real possibility of negative rates. Rishi goes on to warn us that this struggle will be won through a collective national effort, every one of us doing all we can to protect families, neighbours, friends and jobs. For me, this statement conjures up images of war effort and is suggesting we will need to make collective and individual sacrifices, and a period of hardship seems all but certain. We are clearly being prepared for what is to come, but we are also being reassured throughout the speech over and over again. The Chancellor talks about as much capacity as required, unlimited lending capacity, and makes several repetitions of doing whatever it takes. For me, this is one of the most striking aspects of the speech. The repetition of reassurances is clearly designed to stop the panic that was taking over at the time. It is mentioned, so I'll briefly touch upon the March 2020 budget, which announced initial COVID financial measures. The budget allocated funding to support the NHS and other public services. It announced the introduction of the SME Term Funding Scheme. It announced a hardship fund to help local authorities support vulnerable people, as well as changes to statutory sick pay and universal credit. These were clearly just the first initial small steps of a much bigger programme of support. Having announced that the UK economy was being forced to close, the UK government was clearly obliged to step in, especially as typical business insurance policies for SMEs only give basic cover and have no obligation to pay out in relation to the pandemic. Fortunately, so far we have seen an intent from the UK government to support the real economy with a number of measures to help SMEs weather the storm, having been outlined in the speech. Businesses in the retail, hospitality and leisure sectors will pay no business rates this year, and those with rateable values of less than £51,000 can also apply for a cash grant of up to £25,000. And cash grants, of course, do not need to be repaid. It was announced that the Small Business Grant Fund, the SBGF, which covers 700,000 of the UK's smallest businesses and startups, was going to be increased from £3,000 up to £10,000. The fund is managed by local authorities and provides one-off grants to help small business owners manage their operating costs. Rishi Sunak also announced additional support for individuals in that mortgage lenders had agreed to offer a 3-month mortgage holiday. This has subsequently been extended by a further 3 months, and reports in May show that over 1.8 million mortgage customers have taken advantage of relief for making payments so far. This is one to keep an eye on in the coming months, both from the perspective of protecting homeowners, but also the knock-on effect for mortgage lenders themselves and financial products linked to mortgage payments. There will no doubt be some gaps in the safety net laid out by the Chancellor, the Treasury Department and the UK Government. There is a clear sense of urgency and action to support the people, or at least cushion the fall on Main Street. That being said, it wouldn't be a proper economic crisis if big businesses didn't need help too. As well as acknowledging the need for tailored support for the transport industry, the Chancellor announced an unprecedented package of government-backed loans to support businesses, with an initial £330 billion of guarantees which will be delivered through 2 main schemes. I'll take a quick look at those schemes now, because although they comprise the bulk of the support package in terms of monetary values, they are covered in just 2 sentences in Rishi Sunak's speech. The first scheme I want to cover is the Business Interruption Loan Scheme, which was initially announced in the budget a week before, but here Rishi confirms an increase in the maximum loan amount from £1.2 million to £5 million. This was only available to SMEs as stated in the speech, but the Chancellor has subsequently expanded this scheme so that all viable businesses with a turnover of more than £45 million will be able to apply, and firms with a turnover of more than £250 million can borrow up to £50 million from lenders. So this scheme is now 2, the CBILS and the CLBILS, and that's the Coronavirus Business Interruption Loan Scheme and the Coronavirus Large Business Interruption Loan Scheme. The only difference between the 2 is the loan amount and the eligibility criteria. The basis of the support is the same in that the UK government is encouraging lenders to lend to businesses by guaranteeing 80% of the loan. If these guarantees weren't in place, lenders would be reluctant to lend to businesses during uncertain economic times, especially when those businesses had been forced to close and therefore had no income. Ultimately, the businesses remain liable for repayment of these loans, but should any of those businesses fail and are unable to repay the loan, 80% of the outstanding amount will be paid by the UK government, or more accurately, the UK population, therefore mitigating most of the risk faced by lenders. The other scheme Rishi touches upon is where the bulk of the £330 billion in guarantees is likely to go. Rishi describes the scheme as supporting liquidity for larger firms through a Bank of England lending facility to provide low-cost, easily accessible commercial paper. I'd like to first explain this and provide a bit of translation on what it actually means. By stating the need to support liquidity, Rishi is telling us that larger firms were struggling to get enough funding to cover their short-term obligations, and the government needed to step in. In a letter from the Chancellor to the Governor of the Bank of England, Andrew Bailey, that same day, Rishi describes the COVID Corporate Financing Facility, the CCFF, as supporting companies which are fundamentally strong but have been affected by short-term funding squeeze. The CCFF will act as a vehicle to support corporates who would ordinarily seek market-based finance for their working capital, typically required for payroll and other short-term liabilities. It's clear that the financial institutions who financed these short-term loans didn't want to buy the commercial paper that corporations needed to sell to stay afloat at the time. The scheme is essentially the same as the CBILS in that it provides government guarantees on loans to businesses, the main difference being that the CCFF loans are 100% backed by the UK government should the corporations default. Now, the measures that the Chancellor announced during this speech in March have evolved and have been added to over the months since then, and my intention is to review some of the more substantial measures in more detail, such as the C-bills and the CCFF, and there's some interesting reports on the Bank of England website which we can have a look at. As I said at the start, I think this speech will go down in history as one of the most important speeches ever given by a UK Chancellor. It's also important to note that Rishi Sunak had recently replaced Sajid Javid, who resigned as Chancellor of the Exchequer on 13th of February after refusing to fire his advisers during the PM's cabinet reshuffle. This was just 11 days before the beginning of the historic FTSE crash. It's an interesting timeline, as I'm not sure how well received or appropriate it would have been for a career banker to have delivered the news that we have never faced an economic fight like this one. As it turns out, in my opinion, Rishi Sunak gave a great account of himself in that baptism of fire and appears to be the best man for the job. I'd love to hear your thoughts on that and anything else I've covered in this episode. So that's it for now. Thank you for watching. I'm Mike, and I hope you join me in the next episode of Mikeonomics.